morning. It's Bettina Reid with HomeLife Benchmark Realty Cloverdale. I'm here with Inder Matharu from Bayfield Bayfield Mortgage Professionals. You're going to get something wrong already. Okay, let's try it over again. We'll see if I can edit. I'm going to try and see if I can learn how to edit the video at the same time. So, good morning. It's Bettina Reid with HomeLife Benchmark Realty. Tongue-tied. Good morning. It's Bettina Reid with HomeLife Benchmark Realty Cloverdale. I'm here with Inder Matharu from Bayfield Mortgage Professionals. How are you today?
I'm doing well. And yourself?
Very, very good. Inder, one of the most asked questions in regards to mortgages, I think, that I get on a daily basis is fixed rate versus variable rate. What do you recommend?
Well, you know what? Fixed rates and variable rates, those are the two most common type of mortgages that are out there. And it truly depends on what your comfort level is within the mortgage market. And what I mean by that is that with a variable rate, the variable rate mortgages are based on the rates that are set through the Bank of Canada and prime rate, right? They're not like the fixed rate mortgages, which are based on the bond market, right? So two very distinct differences between the two interest rates. With I'll just start off with the fixed rates.
Sure.
With the fixed rate mortgages, they start anywhere from a 6-month term to a 10-year term. Right, so you've got a nice long stretch where you can either have a 5-year term, 2-year, 10-year. Now, with the different rates, or with the different terms, you've got the different rates attached to them. But what that does, it allows you to almost customize what you want to do with your mortgage, whether it's basing it with your own personal long-term or short-term goals. So if you're looking as an investment property that you want to hold on for a year or two, you can have a 2-year fixed-rate mortgage, take advantage of the lower rate, and then not have the payment penalties if you decide to sell it earlier.
Okay.
With the fixed rates as well, you've got also different options such as being able to make extra payments, double up your payments, make lump sum payments at the end of your term, and what that allows you to do is pay off the principal a little bit faster. Right. It also gives you the flexibility of having monthly, bi-weekly, semi-monthly payments on your mortgage, but a lot of those things are all dependent on the lender as well. So that's a key thing. You've got to make sure what you're looking for is attached to the lender that you want to go
with. So not all lenders will offer all those options?
No.
Okay.
No. Now, with fixed rate mortgages as well, two things you've got to be careful about is there are a lot of rates that are out there. So if you're out there comparing rates, you've got to make sure that you're finding out what those rates are offering. So there's quick close mortgages that are usually within 30 days. They offer a special rate, and then there's what I call no-frill mortgages, which are rates that are even a slight bit lower, but those are no frills. You don't have any options with those mortgages. So if you're in there for a term of 5 years, then for 5 years, you don't have any options at all. You're locked in until the end of 5 years.
So you can't change to a bi-weekly or make a lump sum payment or anything
Nothing.
like that?
It's you go in, it's like, hello, we'll see you back in 5 years.
So the benefit to that is that you're getting a lower rate?
You're getting a lower rate. It's great for somebody who is on a fixed budget, who's making payments, who wants to know what their payment is going to be from today till the end of their term, who's not planning on making any lump sum payments or selling, and they know that they're going to be in this house for a fixed 5-year term. Okay. Right? It's a great way to set it up. You've then got your variable rate mortgages. Your variable rate mortgages, like I said, are based on the Bank of Canada's prime rate and the bank prime rate, right? And at this point, it's prime minus something with anywhere from prime to prime minus 0.2, 0.1. It just depends on which lenders you're looking at. Now, with those rates, they also come in a term of 3 or 5 years, right? So you can have a variable rate for 3 years on a 3-year term or a 5-year term, similar to the close rate mortgages. So what that does is that for the 3 years or the 5 years that you're in it, it is a term, the rate is based over that term. So you're guaranteed that the discount that you're receiving is going to be over that entire term.
Excellent. And what do you find right now? What do you find? Are people taking more variable rate mortgages, or is there a certain type of buyer that is, a variable rate mortgage versus fixed rate mortgage?
You know what? I think there's two things that you got to think about. One is that what is your goals with your mortgage? Are you looking for just a very fixed payment that you're going to pay every month, and that's all you want to worry about, or are you going to be checking rates constantly? Because that's one thing with the variable rates, with the variable rate mortgages, you do have the option to lock into a fixed term for the remainder of the term of the mortgage. Okay. So if you've got a 5-year mortgage and you're into it on your 2nd year, and you're noticing that the rates are going up, you can then lock in for the remainder of the mortgage. So for the next 3 years, you can take the 3-year term rate and lock it in. So there's a nice benefit to that.
And it would be the 3-year term rate at that time?
At that time,
okay.
Yeah. The good thing is that you know, with the way interest rates have been, you can definitely enjoy having you know, the fixed payment and a larger portion of that payment going towards principal rather than interest with the lower rates right now. But currently, it's very hard to say whether you should take a variable rate or a fixed rate, because fixed rates are such phenomenal rates right now too, right? So you can lock into a lower rate for the next 5 years, especially based on all the info that's coming out through the Bank of Canada and things. Whereas they may be raising the prime rate towards the second quarter. So, but still, you're still an excellent rate at prime minus. So it's really hard to determine. The key thing is, what is your long-term goals and what are you planning on doing? And if you are comfortable with your mortgages and being able to make, you know, to be keeping an eye on mortgage rates and knowing what's happening in the market, then a variable rate is an excellent option to go with. If you're looking to just have a monthly payment and budget yourself according to that payment and not worry about what's happening in the market, then the close term is definitely an option as well.
Excellent. Well, thank you very much for your time, Inder.
No problem.
If there's any other questions that anybody might have for Inder regarding mortgages, whether you're a first-time home buyer or a current homeowner, please feel free to call Inder at
604-516-9599.
And your website would be?
It's IamApprovedMortgages.com. So IamApprovedMortgages.com.
Thank you very much. And if you have any other questions, please feel free to give me a call at 778-998-9645 or visit me at my website, BettinaReid.ca. That's BettinaReid.ca. Thank you very much for your time. Bettina Reid with HomeLife Benchmark Realty, and have a great day.